is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show, and you can feel the tension in the air. Gonna have that big jobs report today. About 24 minutes away from where we're at right now. We're taking a look at Apple first. Normally we don't start with stocks, but a lot of these stocks are, looking at these numbers down here, 105.47. Talked about that weekly unfair low. Talked about Apple having a lot of support around this area after the $14 billion haircut from the Irish EU thing, and now they're actually talking about, well, I wonder what other companies are trying to skirt the tax rules over here. But I think all that's going to go away anyway. That's just a matter of time before that little game gets played out and everybody's going to have to pay the piper. But as we look at Apple, the reason I'm bringing it up, barring all the fundamental news, is, we're just kind of in a wait and see right here on this particular stock. This is one of the bellwethers, obviously, of the NASDAQ and the S&P. But as we look at, it was a nice bounce off that area. If I can get this thing to work right today. My charts are a little slow. The S&Ps are smack dab right on the POC of the weekly right there, in the middle of the fair auction on the weekly, in the middle of the fair auction on the daily. I'm going to pull this up too. And this is the little apprehension in the air here. Just everything is kind of swimming around in the balanced areas, waiting for this report. This is such an impacting event on a relative scale to what it normally is. And, we just kind of keep cruising around. Everything's just kind of frozen. The notes are what's really, really interesting here. Not a lot of fear in this. It's kind of incredible, actually. So any type of, when you're, trying to trade around these reports, or maybe even before them, you always try to figure out, how do I, what's the side of the trade where the great odds are and where the least odds are. And if you think about the unemployment report here, a lot of folks are, thinking, we're going to tick down a tenth. I think non-farms at about 180. Anytime you beat it, talking about raising rates, is that going to be really ultimately bad for the economy? I think that's kind of baked in. It's this literally, if it's on the money, which it might be, you might get the market kind of swimming around for a second, and then just start elevating because the numbers out and over, and it wasn't a disaster. So I still think the edge is to the north side here. I don't think a lot of things, when you start trying to weigh out what could go wrong here, I don't think the market's going to take anything too badly here. Because, a quarter point, it takes literally an all-out assault of good economic news for them to even start hinting that they're going to possibly raise rates. So, quarter point, it's not going to, they're not saying, hey, we're in the first stage of a protracted 200 basis point steady move up in rates. And you guys remember the old days. This is nuts what they're doing now. Kind of holding back on things. So the notes are kind of astonishing, actually. If you kind of step back and take into consideration what's happened lately and how they've reacted lately, I think that's kind of where you get the notes sitting right here. Is it's not the end of the world. They're going to move like they're molasses no matter what, one way or the other. All right. Taking a look at beans, this one we really weren't feeling that good about on the long side. We talked about 964.5 just not being in the wheelhouse of trying to buy the bounce down there. Still feel like this is going to be something you can continue to short. And now, by tomorrow, you're going to have a new set of daily inflection points here to lever against again. I don't, going back up into 964 would be kind of nice. That would kind of, but we really want to close on a weekly basis this week, and then kind of, if we're going to use that as something to sell resistance against, be able to kind of wait a week for that to kind of close below, go back and retest so the charts look pretty. But you do have something on the daily here that you're going to be able to play around with by tomorrow morning on beans. And there's a fellow in the den talked about 850 might be in order here, and that 915 is going to be the first. That's going to be kind of the first line down, that inflection point at 915. So you might be able to take some weight off there. And then 850 is probably going to be your ultimate target. I don't disagree with that. So let's take a look at crude. And, my thoughts on this, 2 days ago, we weren't obviously in the studio yesterday. And I'm in the Philippines this week, by the way. I'm going to be back in the States next week. 44.85 was that target. We kind of stopped there before yesterday. I wasn't here. And then we kind of rattled around here a little bit, not too long. I talked about my feelings on crude heading south. This was kind of overshooting what I thought it was going to do. 44.85, I personally took some weight off of that. That was kind of, again, like beans, the first wave down. Can't look at something like that without taking some profits off. But what do you do with crude now? The dollar, has this rally hurt crude that much? I don't think it's been terribly a huge factor in crude. But where's the dollar now? 96.24. That POC on the weekly, we kind of hit it and backed off. I still think we could rally on the dollar, but how does that affect crude, going back to crude? I think that's a small fraction of what's going on with crude right now, and I think crude right now, you don't really have a lot of leverage. You don't have a chance to really get into a trade down here. There's nowhere to play defense except around a shorter-term time frame, these 240s, which I love, as you can see. These profiles act very, very well, and in fact, let's see if we can get this to size up here. In fact, this morning we pretty much used the top and the bottom of the 240s, 43.21 and 43.83, explored the entire fair auction, and are now back in the middle. But I'd rather see some new daily information appear to start getting a little bit more of an idea on how to trade crude right now. The trade's over for me. 44.85 was a target, and that's the way I'm looking at crude right now. Just kind of a wait and see. All right, guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. If you've been living in a cave, we got a pretty big report out this morning at around 8:30, about 12 minutes from now. Unemployment report. We're just kind of talking about the S&Ps before, and you know, we got just a massive amount of stocks in the S&P. I'm showing the scanner right now with just heavy balanced areas. 210 on the, or within the balanced areas, 210 on the daily, 235 on the weekly, 241 on the 240. So not anything going on except a bunch of stocks sitting around waiting, as we've been doing all week. You know, doing technical analysis on a week like this week, and trying to give you guys some good ideas for the week. I saw a comment from Fletch earlier. Fletch, I hope you don't mind me commenting on what you said. It's just been kind of a week where I agree with you. It's been kind of difficult to find trades this week, and probably not the smartest thing in the world to find trades, you know, while everybody's kind of adjusting positions. So I agree with you on that. But taking a look at the S&Ps, the big numbers, the big numbers on the daily, like they have been, 2183.50 up top and 2150 down below. And these are S&P September futures. And on the weekly, you've got 2191.50 up top and 2141.20 down below. So you got a little bit more, you know, neighborhood up top and below on the weekly than the daily. But, you know, if this thing rallies, it starts rallying, I really don't know if any of these numbers are going to stand in the way here. And that would be, you know, if the numbers aren't as good. And, you know, somebody said in the den earlier, too, you know, these numbers are lagging. There's no question about that. This Fed seems to be day trading lagging numbers, as you guys know. They're not doing a lot of forecasting these days. But so you got big support around 2041 and 2049, 2150. And you've got some pretty decent resistance, 2183.50, 2191.50. Let's see here. All right, so somebody in the den's asked me to look at NUGT, gold miners. All right, so here's a weekly chart of NUGT. We kind of bounced off these unfair lows at 1779. We've come down into it hard, and as you can see, we're the weekly's just kind of hanging around above the weekly unfair lows here now, and we overshot it. I think yesterday, excuse me, yesterday we reached a low of what is that? 1715. So overshot it just a little bit, and you really want to see stuff like this when from the long side when when things are defended well. This 1779, and we rallied what, $2 above the unfair lows there pretty quickly. And this morning it looks like on NUGT we're printing about 1961. So I guess the question is on NUGT. Let's see here. Paul, what would be the question here? Is it time to buy this thing? Let's just cruise over to gold really quick before we answer that question. Man, I know gold got close down here to 1295, 1296. We reached the low yesterday of 1305. I'd sit tight on this for a little bit on NUGT. I think gold really, I know we got close in that neighborhood and we popped up a little bit here, but I think if you're looking at my screen, excuse me, gold coming down into this 1295 area could drag that down a little bit more. You might have a chance to pick this up around that 1779 area. So I just kind of sit tight on this one. And this report, I mean, if you want to gamble, it's up to you. Of course, this is a game with a little bit of gambling built into it, but you might want to wait till after this report and kind of let things, as Tom would say, shake out a little bit, and then we'll kind of be able to trade the reaction off of these things instead of rolling the dice before. The problem, and you guys have been trading a while, probably have experienced this. The problem sometimes with getting in before these type of announcements is you try to correct the trade if you're wrong, and sometimes getting in light before these announcements turns into a full-blown battle mentally, physically, financially, trying to fix a situation that you probably could have passed on. So, and gold's popping up here. As you can see, I'm showing it real time over here, 1321 right now. Paul, on the NUGT, they're saying there's a gap at 15. I don't even really need to look back at it. I think gold's going to kind of predetermine, if gold sinks pretty hard, and that that NUGT is going to defend that 1779 area, I think you've got a decent little trade here. But I don't know about the long-term gap back at 15. I kind of look at these profiles to kind of give me the barometer of what to do. And there's some great things that Larry talks about right after this show, a lot of gap stuff, Steve Rhodes, and the rest of the folks on TFNN. But I just, I just like to keep it pretty simple, and I like to use these inflection points, especially on the weekly and daily and these profiles. And I like to let the 240s kind of guide me, from a kind of a trailing profile stop situation. Let's take a look at a couple of currencies because these are obviously going to be affected. The euro, I've been short-minded on the euro. I think the dollar is probably going to move up if you just ask me to totally guess right now. The British pound has really defended that 130 19 area, the unfair lows on the weekly. That's been kind of nice. That the yen overshot that 103. Let's see. Let's give it to you. 103.52 area, but we're kind of back down below. That was kind of a profit-taking event up there on the yen from that 100 30 general area down there. So we've reached our targets on the yen. Not a big fan of shorting this thing, and I think the dollar could go up and kind of drag this thing up with it. Aussie dollar, we are, let's see where we're at here. See if I can get my charts to work. Yep, we touched the 74.78 almost to the tick there. Talked about that being a buy point. We reached 74.90, and now we're up about, 100 pips off of that. I like this one alongside. You guys watch the show, you know that on the Aussie dollar. Guys, we'll be right back, and the report's impending.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're looking at the S&Ps here. Let's just, yeah. Somebody can type in the numbers in the den. That would be cool. The unemployment numbers here. So gold's blowing a gasket here on the upside. S&P is kind of sitting still here. Let's see. Let's look at the notes. The notes are climbing. 151K. That was less than expected. Where are we at on the rate? Definitely short of expectations here. Where are we at on the rate? Notes climbing a little bit. Notes, man, just amazingly hung in there. S&P's not acting bad. Was there a percentage rate? Somebody in the den can. I can't watch everything while I'm trying to run this right now. Crude bouncing a little bit here. Dollar selling off just a little bit. Not terribly. 4.9%. They were expecting 4.8. Was it? Okay, so the dollar, I'm a big fan of being long this thing. 95, 19, 20. Basically, we came down into that, hit 95, 23. Just kind of staying above that unfair high on the dollar. Is this going to give them reason to just put the brakes on everything? It's amazing. Anyway, S&P's heading up a little bit here, 2172. Short-term numbers are 2175 on the S&Ps, and then you got those big numbers up top, 8350, 218350. Crude bouncing pretty good here. Let's go back to crude. A lot of things are going to be kind of recalibrating themselves right now relative to the dollar, relative to the spirit of the economy. There's that 44.85 up there. I'm a bigger fan of continuing to short crude. If we can just kind of get a bounce up into 44.85, that'll be a chance to squeeze the trigger again. And again, I'm just kind of perusing through some of the things that are being largely impacted here. Notes kind of hovering above that 132 area. Let's see. Crude starting to get some legs here. 44.85 is going to be the big number on crude. Let's take a look at gold. Gold rallying a little bit. You got some numbers on gold though. 1331. We pretty much are there now. That's that POC on gold on the weekly fair auction. That's a number to pay attention to there. Relatively wide profile. 1331. Kind of closed below last week. Going back and retesting it right now. Let's take a look at some currencies after this announcement. Here's the Aussie dollar. I love it. Just want to point out the Aussie dollar. This has been a nice little trade to trade off of these weeklies. Pretty much hit it to the tick on support. Talked about laying off this thing after we reached our targets around 77.50 and some change up there. And I think easily now the new number up top or on the Aussie could be 76.89. Yen coming off, as with the dollar, coming off of that 103.52 area. The pound, obviously relative to the dollar, strengthening a little bit. Targets up top on the pound, on the big targets are 136.81. I don't think we're going to reset today. Going back to the S&Ps, just continuing to climb a little bit. Talked about, where was the leverage on this trade? Probably to look at this from the long side. There's not it's not crazy anti raise rates news, but wasn't exactly what they were expecting, and the market obviously likes lower rates, so you got to kind of think about that right now. All right. Let's go back to beans for a second. Bouncing a little bit weaker dollar here. Dollar's starting to sell off more. And now we're back down into that weekly unfair high. I don't like how this thing bounced off of it and then decided to get back down to it. But I actually think we could defend this level. 95.19. And we are there right now on the dollar. All right, let's hit a couple of other particular instruments that are moving around relative to what's going on here with that unemployment report. Let's take a look at the 30-year. Don't look at that too often, but kind of acting accordingly. A little bit of a relief there. Let's hit the, let's see if we've got any prints on any of these ETFs here. Not really. Let's take a look at Apple. Let's go back to that. Moving up, looks like pre-market. We're about 107.47, so higher. And again, if you didn't watch the beginning of the show, we talked about Apple and the day before being able to, just kind of wait patiently until we come down into support, 105.47, and we're trading, let's see if we're trading, highs of the week right now, really, in Apple. A couple others, let's see, pre-market. Oh, 773.20. So pretty much getting back up into these weekly unfair highs here. This is not a stock to be shorting. As we've talked about many times, you got better things to spend mental capital on than shorting Amazon. Let's take a look at Facebook. Just kind of seeing the temperament of some of the big bad stocks that never seem to go down. Let's see. Looks like a print right now is 126.50. So kind of eclipsing its weekly unfair highs right now. We're going to take a look at copper once we get the right month up here. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. A couple of stocks moving this morning. Let's take a look at those. Lululemon. I think we're trading about 70 right now, so down in here. A little bit of a bounce this week off those weekly unfair lows, but when you've got some news coming out, anything can happen, and this is what the chart looks like this morning on Lulu down here. Should you buy it? Is it on sale? It's been a strong stock without question. Now the spine is broken temporarily, and you really don't have anything to hang on to down here to play defense with. So 70, we're just kind of in no man's land. It could go lower, folks. A couple other ones. Yum Brands. Ticking up just a tad. I don't have any prints in that. ABBV. Let's get the right symbol. All right, so support on ABBV is going to be around 62.41. I wouldn't play around with it until we got down there. Good old McDonald's. Let's take a look at it. Old McDonald. So, old McDonald's. All right. So it looks like we're printing 115.77, up a little bit this morning. My feeling on McDonald's is, okay, we definitely showed ourselves early. We definitely caught some good trades. Close below, go back and retest that 118.86 area. And right now, I think you got to be looking to sell resistance. You got big resistance around 118 and some change up there. But I think, you know, the more this spins around down here, around these 115, this 115.19 area, it's going to lend credence more and more that this thing could take another dive. I think you just got to give yourself a little bit of a monetary stop on that one. I love how it's acting. Let's see what crude did in the last. Okay, yeah, we didn't quite get back up into 44.85. Not yet. Starting to come off again. Gold coming off that 1331 area, that POC on the weekly. Not a big fan of shorting gold. Was looking, hopefully we'd have got down to 1295, 1296. That didn't happen. But again, not wanting to mix up my own position in my head, not wanting to really short this thing against 1331. A close above 1331 today is going to be pretty daggone powerful for this product. Going back to the S&Ps. Reading the den here. If you guys had any requests, here we go. Just catching up. Yeah, okay. All right. S&P's is kind of sticking around. Here's the 240s on the S&P. Kind of caught that 2175 area and backed off, but not acting terribly bad. Let's take a look at silver. Let me get the right month up here. All right, just like the contract we were looking at on silver previously, defended this big weekly inflection point on this particular month also, 1861. Here's silver this week. Really nice setup. Talked about this looking a little bit more attractive than gold to buy it early. Getting a nice pop off of there, 1935. So, really good move on silver. I'm going to show this chart again. I think we were looking at the September contract off of those lows. Let me show you this. See. There you go. Similar type action off those September weekly unfair lows right there. All right, let's take a look at Procter & Gamble. And talked about, I didn't see anyhow that this stock would really collapse. I mean, it was almost you damned if you do, damned if you don't on this one. We're not printing this morning yet, but, we talked about this the day before yesterday, and we talked about this kind of being the anti-stock. And, really, really a nice situation for this to be long, continue to be long, actually. So you're kind of rallying if the market rallies, and then you're rallying if the market sells off. And I still feel that way about PG. Nice setup on this stock. Not going to be the most volatile, exciting situation, but you guys know my feeling on that. All right, let's take a look at December corn a little bit. We hadn't talked about this in a while. So you're kind of getting a rally. You had the close below the fair auctions here. You're rallying back up into this 331 area. I think we're sitting right now 328. I think we've been as high as 329. So almost a chance to kind of whack this thing again here. Play defense above this weekly inflection point. Believe it or not, corn can go lower. It's not on sale yet. It's not the back the truck up time for those who like to back the truck up. A couple other stocks. 3M. Don't see a lot of ways to go wrong on this one either. Again, 182.27 will be the targets on it. Right now, I'd put the stops below 179.56. I still think this thing can move up. A couple of stocks that just really have not been working out for anybody lately on the long side, and the scanner really put this one on the radar screen. And we talked about this thing doing a flush below these recent lows. Just because these stocks pull back, folks, these are not on sale sometimes. I mean, they're down for a reason. And if the market pulls back at all, you're really going to see this thing come apart at the seams. And it's coming apart at the seams already, even with the market kind of hanging around near the all-time highs here. Any help with the market? This is that relative weakness play from heck. Going back to the S&Ps, there's quite a few of them we looked at in the scanner that were kind of meeting that criteria, sitting on the edge of the cliff. Had not been cooperating lately. It's a pretty easy shoot fish in a barrel type situation. Pulling these things up and finding the inflection points to lever against. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Sometimes I always talk about some of these trades are relatively boring, relative to playing around with the latest crack out there and the news-related stocks. But, make it easy on yourself. I mean, take a look at some of the things in the scanner that just aren't really cooperating at all and showing some weakness. The market pulls back a little bit. I mean, we looked at Gilead a while ago, just really an ugly freaking situation. And there it is. I just did a little sort here, below weeklies, below dailies. Fossil is on here. The other day we talked about this thing's just got issues in general. It's okay to short some of these stocks. It's okay to short the weak stocks and buy the strong stocks like Procter & Gamble. Buy it. Fossil, sell it. These are pretty, getting into these pairs trades sometimes. I mean, there's a lot of smart people now that are, trying to run people out of those pairs trades, and they were like, God, I thought these things were supposed to arbitrage together and blah, blah, blah. I mean, literally make it easy on yourself. Find some weak stocks to short and strong stocks to buy. You can go wrong sometimes doing that, but overall the odds are in your favor. So H&R Block, I know this has had some news, but these are stocks that hadn't really wanted to get out of their own way, edging down. There's the weekly up for highs, 24.62. Fossil, just, let's take a look at Dollar Tree. Well, that was not able to be forecast. I'll admit that. But some of these, Tesla is in that same camp right now. 2033 right now. Look, that was the big number we talked about on the weekly. There's that big weekly number right there. These stocks rallying up into these inflection points. I mean, you kind of hope for stuff like that to happen so you can really get some more shorts off in situations like that. We talked about this one the other day. AEP. Starting to break down, go back and retest, sell off again. Celgene, a lot of these XLV stocks. Here we go. Use those inflection points to play defense against. Because if the market ever comes off, and it might not, I mean, a lot of times these stocks will move sideways, worst case scenario, and be pretty painless. So the dollar is really defending, going back to the dollar, 95.20. I think we reached the low this morning of 95.17.5, 95.18. So dollar's hanging in there. Even in the face of Yellen seeing one economic data point that's just causing her to lose sleep. I don't know how else to say it. S&P's moving up. We talked about, what's the possible slant here is to probably just, catch the support, catch the bid. Gold, that 1331 is a big number. I'm not a big fan of shorting against it, but that's going to be a big number for the borders to be crossed on that one. 10-year not acting bad. Just to kind of recap here before we get off the air. And some of the currency plays. Yen trades over for a little bit, folks. Alongside. Guys, stay tuned for Larry. Really enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.